Hey folks, welcome back to Wisconsin Family. We are rocking out here with John Scheer from Trinity Financial Planning, and we're going to talk to him in just a second. We're so glad to have you.
Thank you.
And if you haven't noticed, we are at Prairie Athletic Club, and we are having a good time. There's some classes going on behind us, and it's a great place.
Yeah, a lot of music happening here.
There's some music, yeah. We're going to chat with those folks a little bit later. Right now, we are going to chat with Mr. John Scheer, who has joined us before and given us some excellent financial advice. And today is no different. We're going to talk about taxes.
What could be more exciting than taxes, right?
Exactly. Well, if there's a return,
We could
it's
talk
very
about
exciting.
death too, if you
That's
wanted to.
right. That's right.
Death and taxes. But let's discuss taxes because we feel like it's a little ways away at this point, right? It's not too daunting just yet. But why should people be thinking about taxes now, even though returns aren't due really until spring?
Right. October is not typically the time you think to talk about taxes, but really tax preparation is what's done in the spring, and that's just recording what happened last year. This is the time of year for tax planning where we can take some action to reduce that tax bill and increase that refund you got coming in the spring.
I think people heard what you're saying there. Reduce that tax bill if there is a tax bill.
That's
We want
right.
to reduce.
Maximize the refund and
Yeah.
everything.
One of the things we ask people is, when's the last time your tax person came to you and said, hey Jess, I've got some ideas I think are going to save you some taxes in the spring. Let's talk about it today.
Yeah, that doesn't sound familiar actually.
Typically doesn't happen. If you
Yeah.
got somebody like that, keep them. Right? But if not, maybe you want to look for somebody who's going to be a little proactive and try to help you reduce that tax bill, because the law is always changing, and what worked last year might not work this year.
Right.
What works this year might not work next year.
Right.
So you got to keep up on that.
I think that's why it's so important to have advice, is because of everything's always changing. So even if you are knowledgeable in the field at one snapshot moment, that doesn't mean that next year you're going to have the same knowledge base.
Yeah.
That's exactly right.
So what type of tax planning should people be considering right now?
Well, one of the big things we look for is changes in income. If you've got a big year in income, if your business did well or you made some big sales, if you're a salesperson, we look to accelerate deductions into this year to take the deductions at that higher tax bracket. On the other side, if you've had a lower income year, maybe your business didn't do as well, or you had some unique write-offs, that's a time to defer deductions into next year, or even accelerate income in some cases if you have a particularly low year from an income standpoint.
Okay.
So that's one of the big things we look for people is, are there changes in your income that we can take advantage of?
Interesting.
The other one that we look for with a lot of people is taking advantage of your retirement plan contributions. For every dollar you put into your 401k or 403b, you save 25 or 30 cents in taxes. So that can be a way for people who have some
I didn't
extra
know that.
money to be able to defer at the end of the year from a retirement and a tax standpoint.
All these things I have no idea about, so I'm glad we're talking about this today. Maybe give some examples in your experience with everything that you're talking about, some real examples of real folks who have saved some good money doing these things.
Sure, you bet. Well, like one of the other things is taking advantage of deductions and making sure you track those things. We use a book called Deduct It for helping our clients keep track of their clothing and other things that they give to charity.
Okay.
And so, as an example, I have a person whose husband died last year, and she was giving some things to some of the clothes, and she said, boy, I've probably got $500 or more in things that I've given of his clothes. When we took a look through this book, it was just this week, there's over $3,000 in deductions that she takes because she's accurately recording what those things are and what the values of those things are.
And is that what this is? You can actually track it in this, or is this a way for you to
Right.
check against
it's
what
it's
it
a
is?
tracker, so you
It
list the
tracks
number of
it.
things. You know, a men's jacket is worth between $12 and $40 depending on the quality of it, and
That's
so you
so
actually
smart.
record and document those things.
Because trying to remember at the end of the year what you've done, you think you're going to remember everything, but
That's right.
just no way.
Another example is that we've got a client who's retired and her house is paid off, and so her itemized deductions each year for her taxes and donations to charity are just above the standard deduction that everybody gets. So what we're having her do is, rather than paying her things each year, we're having her double up and bunch her deductions. So she paid her property taxes in January, she's going to pay them again in December. She made her donations to charity this year, and in December we're going to make next year's donations and write those checks in December, so she gets all the credit in 1 year. So she's still paying the same amount of money, but she's going to get about an extra $6,000 or $7,000 in deductions over 2 years.
Wow.
By doing that, just by timing on things and taking advantage of the
Right.
law.
I feel like every time we talk to John, I have like an aha moment. You know, it's incredible.
Well, and every time we've talked, I think that as far as taxes go, timing really is a big,
Sure.
a really important part of tax planning. And you know, you have mentioned to me before that tax smart moves need to be done by the end of the year, by December 31st. What things can be done after year end to save more money on taxes?
I mean, that's exactly the point about the December 31st is most things are by the end of the year, so you really got to be proactive now.
Right.
If we get to the end of the year and you get to tax time, the big one that you can still do is an IRA contribution. And that you can do that until your tax return is due. So there's still some things if you qualify for one. That's the big one, but most of the things are a 12/31 deadline, so your donations to charity, your property taxes, those things, those are decisions you have to make before the end of the year.
Okay, so timing is key there. And real quick before we go, any other tricks of the trade that you want to leave folks with?
You know, I think the big thing is just to be proactive on things and get some advice and take a look at what it means now, because by the time we get to tax time, it's too late to make any changes on things.
So smart.
And do keep track, and these sorts of
I
things
love
where
that book.
you can, you know, you're already doing this to take advantage of that. We've got some extra copies of this book, and if for the first 25 people that come to our website, we'll send a copy to this, anybody that wants to sign up and ask for this
great.
if they saw it on our show here.
That's a neat book. And John has a fantastic, I want to brag on your website for a second. We were just saying that before we started. An excellent website, a great place to start, and a great resource, don't you think?
Yeah, you got a great blog that you do.
Yeah.
Of course, you post all of our videos here.
That's right.
Not that we're biased.
Not that we're
Yeah,
biased.
no, not at all. Well, John Shearer, Trinity Financial Planning, go to his website, give him a call. Thanks so much for the advice. We appreciate it.
All right, thanks
and
so
we'll
much,
have
you
you
guys.
back, as you know. And we'll be back with more Wisconsin Family. We're going to chat with the folks here at Prairie Athletic Club. That'll be next after the break. Stick around.